Good day, ladies and gentlemen. So in this particular video, I'm going to teach you a strategy that you can use to trade gold. So if you have been struggling with gold, this video is definitely for you. Okay, so I'll be teaching you a strategy you can use to trade gold and start seeing, some positive results. Okay, so before I proceed, I would like to give you the background that you need to have to be able to adopt this strategy, to be able to execute on this particular strategy. Okay, the very first thing is you need to know what a swing really is. Okay, I've seen a lot of traders talk about swing high and swing lows, but they don't really understand what a swing high and a swing low mean. Okay, so that's the very first thing you need to understand. So what is a swing high? Okay, swing highs and swing lows are usually a set of 3 candles. It has to be 3 candles. All right, so I'm going to draw 3 candles to depict a swing high. Then I also do the reverse case for the swing low. All right, so you need to have 3 candles like this. Okay, then let's say you have another one right here. Okay, now the top parts of this set of 3 candles, this top part, the top wick, the eye of this middle candle right here is your swing eye, because it is the eye of this candle at the center is higher than the eye of the candle to its left, is also higher than the eye of the candle to its right. So that's the idea of swing high. Okay, while for swing low, you're gonna have something like this. You have a candle right here, it has its high and its low. You have another candle right here, it has its high and its low. Then you have another candle right here, it has its high and its low. You would notice that the low of this candle at the center is lower than the low of the candle to its left hand side. It's also lower than the low of the candle to its right hand side. Automatically this level becomes your swing low. So you can place an horizontal line across this low. It depicts your swing low. Okay, so the idea is you have to look at 3 candles, then you check out of those 3 which one has the lowest low. So the low should be lower than the candle you want to use as your swing candle. Okay, which will give you, let's say, your swing low. For example, look to the left of that candle and ensure that the candle to its left has a low that is not lower than the low of your swing candle. You also look to the right to ensure the candle to the right, its own low is also not lower than the low of your swing candle. Then you have a swing low at that level. I'm going to show you examples on the chart, so you see the different variations that you can actually have. But the idea is whatever candle you are using as your swing candle to give you your swing high or your swing low, the candle to its left and right must not have a lower a lower low than your swing low, and the candle to the left and to the right must not have a higher high than your swing high. As simple as that. So that's the very first thing you need to know, your swing low and your swing high. The next thing is your fair value gap. I want to believe that most of us already know what a fair value gap is, but in case you don't know what it is, I'll just quickly give you what a fair value gap is. It's also a 3 candle sequence. So you also have a 3 candle sequence just like this. Okay, whereby the wick of the first candle does not intersect with the wick of the third candle. So this is your candle 1, candle 2, candle 3. You would notice that the wick of this first candle, the top wick of the first candle, does not intersect with the bottom wick of the third candle. Okay, thereby leaving us with a gap in between, which we call the fair value gap, FVG. So if it's bullish, then it becomes a bullish fair value gap, of which when price returns to this gap, we are looking to take a buy trade. And if it is bearish, whereby you have the 3 candles moving downwards, then we are looking to take a sell trade when price returns to the gap. So now this strategy that I'm going to be using on gold, okay, currently I'm on 5 minutes time frame, okay. So this particular strategy that you're going to be using on gold is going to be a combination of fair value gap and swing highs and swing lows. So how are you going to combine them? You would notice that after you finish learning your fair value gap from ICT, etc., okay, you would notice, if you have been if you have spent some time in the industry, you would notice that fair value gaps, more often than not, they don't work. They work sometimes and they don't work some other times. Now, the reason why they work sometimes and they don't work some other times is part of what I'm going to be teaching you, okay. The system I'm giving you will help you choose those fair value gaps that are high probability, okay. Whatever your PDRA is, whatever your point of interest is, all right, you just need to know that all those your points of interest, your POIs that you are using, be it order block, be it fair value gap, be it breaker block, whatever it is that is your POI, just know that not all your POIs are created equal. There are some conditions that make some of those POIs more powerful than others. That's the reason why you take a trade today on your order block, it's a win trade. Tomorrow you take a trade on that same order block again, on a different order block forming, you still take the same order block trade and it ends up in a loss. That should tell you that the one that played out well in your favor, there are some conditions that surrounded that one that made it work, and those conditions are not available, okay, when it comes to the second trade you took. That's the reason why the second trade did not work. But some of you don't research enough to point out, to bring out these conditions. You just feel, oh, it's probability, so you just take another trade, hoping to win more than you lose. But that's not the way to do it, okay. Sometimes you need to dive deeper into your system to find out why one worked and the other did not work. So based on what I want to teach you now, all fair value gaps are not created equal, okay. There are some fair value gaps that are high probability, and it's part of what I'm going to be teaching you right here and right now, okay. So it's all about a marriage, okay. You have to marry your swing high and your swing low with your fair value gaps. If you have a fair value gap and you mark it out and you notice, look to the left, there should be a swing low or a swing high that aligns with the middle candle of your fair value gap. It must align with it perfectly. It must align with the middle candle. The middle candle is the second candle of your fair value gap. If you don't see a swing high or a swing low, you know, cutting across the middle candle of your fair value gap, don't take that fair value gap trade, because that fair value gap is a low probability fair value gap. So it's a 50-50 chance it might not work, okay. But once you see that a swing high or a swing low aligns with the middle candle of your fair value gap, then you are good to go. Probability that it's going to work out for you is very, very high, okay. So this is what I call a swing candle. This is a swing low right here. This is a swing low right here. This is a swing low. What made it a swing low? Look to the left. The low of the candle to its left is not as low as this particular low, and the low of the candle to its right is not as low as this particular low. That makes this your swing candle, and you can mark this as a swing low, okay. Let me get something. I want to mark that area as my swing low. Okay, so you can see this is your swing low right here, all right. And what do you know? What do you see playing out? The swing low aligns with the middle candle of your fair value gap. So all you now need to do is place an horizontal line to mark out your fair value gap like this. Let me double that like this, okay. You already know where your SL is going to be. You place your SL just a few pips beyond your what now? Beyond the first candle of the FVG. That's the safest and the professional position to put your SL. Okay, some people, they want to take a trade from fair value gap here, they'll put the SL here like this. It's wrong. It's wrong. Okay, your SL stop loss should be just a few pips, or you can even put it exactly on your watts, the first candle that formed your FVG like this, but I like to give it a little bit of room like this. Okay, so when price returns here, you're taking your watts, you're taking your sell trade. Okay, and what do you see playing out? Price moved towards the our special fair value gap. It did not touch it, then it started moving downwards, which means it's gonna touch it later. Okay, so just let that be. Okay, started moving downwards, no problem. We don't chase price. We've set our pending order there and we wait. Okay, so price was moving downwards aggressively and it did something else for us. What did it do? Printed a fresh fair value gap. Now, am I going to take this fair value gap? It depends on whether or not a swing low aligns with the middle candle of the fair value gap. And as you can see, we have a swing low right here. Can you see that swing low? Why is it a swing low? This low of this particular candle is lower than the low of the candle to its left, and it's also lower than the low of the candle to its right. Okay, so this is a swing low. This one right here is the swing low. All right, so let me mark out my swing low to ensure it tallies with the watts, with the middle candle of an FVG. Okay, yes, you can see it's cut across the middle candle of our FVG. Okay, so we can do what? We can take a trade from that FVG. All I need is my horizontal lines to mark out my FVG. Okay, right here. Here with your SLB, your SL goes a few pips or just at the high of the first candle of your FVG. Okay, then you can go for 1-to-1. All right, so price came back into the FVG. You can see this bullish candle bringing us back into the FVG. Would have entered the trade right here, and price pushed in the downwards direction. Okay, price did what? Moved in the downwards direction. Okay, so let me quickly show you something. Okay, because if you start trading with this system I'm teaching you, you might fall for this kind of trap. So let me explain what happened here. You are not supposed to take trade from this fair value gap. I'll show you why. Now, this is a swing low, right? Because the low of this candle is lower than the low of the candle to its left and that of to its right. So it's a swing low. Good. But does it tally? I want to use this horizontal line now to check if it aligns with the middle candle of the FVG. Okay, you can see it does not align with the middle candle of the FVG. Why? I know it passed through the middle candle of the FVG, but you would notice something, that the third candle of the FVG, its wick is touching it. Your swing low should be such that it goes in between the middle candle of the FVG and the first candle. The first candle of the FVG's wick should not touch it. The third candle should also not touch it. Okay, it should just be on its own in the middle of the fair value gap. Do you understand? But you would notice that this third candle, its wick is already touching it, so this is not a valid FVG based on the system I'm teaching you. Look at the previous one I gave you. Look at the previous one I gave you. What do you notice? You would notice that that low right there goes in between, okay, the two, the first and the third candle of the FVG. Look at the wick of the first candle of the FVG did not touch this line. Okay, the wick of the third candle of the FVG also did not touch this line, so we have that line in between. So if the wick of the one of the candles of the FVG is touching it, then it's invalid. Okay, so this is the first example I gave you. It's up here. Let me delete all these other ones. Let me delete these ones. These ones have already played out. Okay, so this one right here has not played out because price was unable to get here. Okay, you remember this first example. This second example played out, so I've deleted its own lines. So I'm waiting for price to get here. Okay, so price kept pushing in the downwards direction, and then at this point we have the same thing playing out. We have an FVG printed here. Okay, what do you see happening? Can we take a trade from here? Yes, we can. Why? Because to the left there is a swing high right here. Why is this a swing high? This eye of this candle is higher than the eye of the candle to its right. It's also higher than the eye of the candle to its left, making it a swing what? A swing high. Fine. Now let me check if that eye goes through our middle candle of FVG without the first and the third candle touching it. Yes. So you can see this did not touch it, this also did not touch it, so we can take our trade from there. Okay, let me get horizontal lines to mark out my FVG. Okay, so what do you see playing out? Price came back into that FVG and pushed in the upwards direction. Okay, you can see price pushing in the upwards direction. Okay, do you see that? Now something else I want to quickly point out is price tapped into that former FVG that it did not tap into before. Wait, let me zoom out a bit so you can understand what I'm saying. Okay, yeah, so I'm zoomed out now. This is the first example I gave you that I told you this FVG is valid. I showed you why it is valid and all, but price pulled up but did not touch it and then moved downwards. Now price came up again and touched it right here. You can see that there was a touch right here. So if you had a pending order waiting, you would have been in profits, because after it touched it, it moved downwards. It would have put you in profits. Okay, but you need to monitor your trade because another valid FVG has been formed here. That's why it did not keep going down. If not for this other valid FVG that was formed here, it will keep pushing you in profits. Okay, so if you have spotted this other FVG, you would know that you need to take your profits once it starts tapping into this other what's it called, valid FVG that is here, because it won't go past it. It still needs to respect this valid FVG, which is what it did. Tapped into this one, respected it, came down, tapped into this second what's it called, valid FVG, they started pushing in the upwards direction. Okay, so that's exactly what played out. I don't want the video to be too long. I can go on and on with examples, but please just go and backtest this and see how it works out for you. I'm not trying to say you're gonna win all your trades. If you're a fair value gap trader, I'm not saying with what I've taught you now you start winning all your trades, but you would notice a significant increase in your win rates. Okay, based on what I have taught you. It's going to help you filter out your poor FVGs and you trade with more quality fair value gaps. Okay, so basically if you're a new viewer, subscribe to the channel and turn on the notification bell. I'll see you in the next